Welcome to season 2 of the Chartered Show, and I just want to wish you all a great 2023. Today on the show I'm joined by 2 guests. My first guest is Charmaine Prout from Chartered Tax, and we're going to be talking about maybe something you don't even know about, but these penalties that people are receiving from SARS for not submitting their income tax returns on time. And my second guest is Glen Baker from WealthStrat, who's going to be sharing with us his outlook for 2023. So let's sit back and enjoy the show. So my first guest on the show for January 2023 is Charmaine Prout of Chartered Tax. Charmaine, welcome.
Thank you, Kim.
So I know it's your silly season, and I know you're sitting here today and you've got 100 things to do, and I know you were very kind in saying that you'd come in for the interview. So Charmaine, thank you first of all in provisional tax silly season for agreeing to do the interview with me.
You're welcome. It's my New Year's resolution, Kim.
I must say, when I asked Charmaine to be on the show and she jumped at it and said, well, just tell me where and when, I did reply to her, so tell me, where's the real Charmaine gone? But anyway, here we are today, and the reason that I asked Charmaine to be a guest on the show today is 2 things. The one is the provisional tax, and what we're going to be discussing first is actually the penalties that's happening when people are putting in their tax returns. Charmaine, what is going on that people are getting these penalties?
These penalties have always been around, but SARS has never really implemented them. But 1st of December 2022, SARS brought in this administration penalty, and they've actually really stuck to their guns this time. And we found clients that had not submitted their tax returns by the due date, so the non-provisional taxpayers who had to submit their tax returns by 25th of October, 10th of November, there was the penalty, and SARS stuck to it. And they have since then...
So no leeway?
No leeway.
You had to
this
submit
year,
exactly on.
No. This year, they have absolutely stuck to it. And Kim, this penalty ranges from 250 Rand to 16,000 Rand. And this penalty is based on your taxable income, and they are absolutely strict with it. And the 10th of every month, they are enforcing this penalty for non-compliant of submission of your tax return.
So Charmaine, just tell me, do they alert you that you've got this penalty, or how do you find out that you've even got this penalty?
So they are, and a lot of the taxpayers are actually thinking, because in the past they've had a lot of scams with SARS, and a lot of the taxpayers are actually just deleting the message and going, oh, this is a scam, and not actually reacting to it.
Well, I've got to just share. I mean, for those of you listening, Charmaine does my tax, and when I do get an SMS from SARS, I forward it to Charmaine. The first thing I say, is this real? Should I be acting to it? And what's really great for me is you normally just say, I'll take it over, I'll worry about it.
So that's what's happened, is a lot of taxpayers actually 10th of November got this SMS to say, you are non-compliant. And they were like, this is a scam, and just ignored it. And a lot of the taxpayers are now sitting with penalties. For individuals, SARS has gone back with this administration non-compliant penalty to 2006. So if you've not submitted your tax return since 2006, they are passing these penalties every month from non-submission.
I mean, in reality, where are people going to find that money from? Because if you haven't been allocating it and putting it away, not everybody's going to have it.
Exactly. So that's why it's so important, Kim, to submit your tax returns on time. And often I say to taxpayers, they say, yes, but a couple of years ago we were told, if you're under the threshold, you don't have to submit your tax returns. Just the other day, I had a client phone me and say, but Charmaine, I don't earn enough to submit a tax return. And now SARS has sent me an SMS to say, non-compliant administration penalty imposed. So I just say, submit.
So what should you do? Submit it and just say nil
So even if you're
amount.
even if you're under the threshold, just submit your tax return. It's really not a hassle to submit it, and then you won't land up in this situation.
Wow, I mean, that is really not what we wanted to start our January with, on top of absolutely everything else. But again,
exactly, yeah.
So Charmaine, if people need theirs checked or if they need it filled in, they contact their financial planning specialist here at Chartered, and they'll be in contact with you.
Correct. Yes. That's absolutely what they do. And now 23rd of, so in actual fact what SARS did last year, normally due date for non-provisional submissions is end of November. SARS actually moved it forward, and last year was 25th of October. It was actually not announced really anywhere in the media anywhere. So it was 1 month, and there were clients didn't submit. Also now with provisional taxpayers, due date is normally the 31st of January. SARS moved it forward to 23rd of January. So they actually moved it forward by 7 days. So who was to know? And now, if you haven't submitted it by the 23rd of January, there's your penalty imposed.
So now we're talking provisional tax.
We're talking provisional taxpayers. So your 2022 tax return would normally have been due 31st of January.
And now
they moved it forward to 23rd of January. So if you as a provisional taxpayer have not submitted your tax return for 2022 already now, you've now incurred that administration penalty.
Well, Charmaine, we'll go into that a little bit more, but what I wanted to understand, and just maybe for some of the listeners that perhaps are confused whether they are a provisional taxpayer or not, maybe you could just explain what makes you a provisional taxpayer.
Okay. So yes, it is quite it's quite a challenge to understand why you need to be a provisional taxpayer, and why you are and why SARS deems you sometimes to be a provisional taxpayer. So if you earn a salary from one source, so for example, exactly. So you're a salaried employee, and you only earn an income from one source, you will never be a provisional taxpayer, because your employer deducts PAYE from you, and therefore you are not a provisional taxpayer. However, if you are an employee and you have rental income and you have interest income that's over the 23,800, SARS might deem you to be a provisional taxpayer. But I always say to my taxpayers, we wait. We wait for SARS.
So they tell you,
they
we've
tell
now
you,
made you a provisional taxpayer.
We now make you, and they will notify you that you are a provisional taxpayer. So I don't offer to register you as a provisional taxpayer unless I think it is beneficial for you to pay the taxes twice a year and not have to pay it only on assessment.
Wow. I presume this also goes to the interest that you pay.
Exactly.
On your investments.
So now,
if your investment interest is over
over the threshold,
then you'd also become a provisional.
So now we talk about a lot of our chartered wealth clients. So a lot of our chartered wealth clients are our retired clients. So a lot of them are earning annuity income, interest income,
maybe
rental income, a lot of
consulting.
Exactly. So now what's happened is, we're earning income from 4 sources, and it is beneficial now to be a provisional taxpayer, because not one of those people, your annuity income's being taxed, but remember, it's only being taxed at source. So, for example, if your annuity is being taxed, you're earning a 300,000 Rand annual annuity, they're only taxing it on that sliding scale. It's not enough to cover for all the other.
Taking everything else into account.
So it is now beneficial to say, okay, let's register you for provisional, and let's pay the tax twice a year, so you don't get lumped with that money at the end of the financial year.
Charmaine, just to close, and maybe for some people that haven't met you and people that are looking for somebody to do their tax, maybe you could just share a little bit more with us about what are the services that Chartered Tax actually offers.
Okay, so Chartered Tax is primarily, we do individual tax returns, provisional taxes, but we also do a lot of trust structuring, companies, structures. So it's kind of like an all-round accounting, tax, family structure service.
And then Charmaine, if anybody does want to use your services, how would they get in contact with you?
We have quite a nice system set up. They get in touch with their financial planner, who will then get in touch with Lisa, who's my colleague, and she will set up a meet and greet with me and the financial planner. We kind of have a little compliance session, and then we send out our mandates, and it's as easy as that. And tax will never be simpler.
Thanks very much, Charmaine. And I can attest to that, having taken Charmaine before she joined Chartered Tax, my packet with all my slips in, and she made magic with that packet. So I hope you're much better than me at keeping everything up to date, and you don't take it to Charmaine in a packet. But again, Charmaine, thank you for joining me. Thank you for the valuable information. And as hard as it is for all of us to pay tax, I do know that having you as part of my team and support, you do make the whole tax paying a lot more simple. Thank you very much.
Thank you, Kim, for having me.
Welcome to our second part of the Chartered Show today. I'm now joined by Glen Baker, who heads up WealthStrat's direct personal portfolios. Glen, welcome to the show.
Thank you.
I thought maybe just to start by, I want to just explain to the listeners and the viewers about WealthStrat. Maybe some of you have been in meetings with the financial planning specialists and you've heard the mention of WealthStrat. But WealthStrat is a new part of Chartered Wealth that we've opened up as our implementation business for our investments. And what Glen's doing is he's heading up these direct personal portfolios. Glen, maybe tell us a little bit more about what is a direct personal portfolio.
Thanks, Kim, and it's great that you've outlined that. And it's a very simple structure, if you like, and hopefully a very simple product. And that is that some clients, for one or two reasons, and one of the reasons might be that they are used to having their portfolios managed by a portfolio manager that they have access to and contact with, and the second one might be that they have a combination of products. Some are in what we call the retirement pool, and some are managed outside of that pool on a direct portfolio basis.
So with that, that's a much more personal involvement in the choices of what they invested in, or is that correct?
Yes, well, so the discretion would sit with me in the main, but what it is it's a combination and a partnership, if you like, between the client and me and the team that looks after their portfolio. So they would have much more direct contact with the ultimate portfolio manager, which is me and the WealthStrat team.
And what's great is that Glen is here at Chartered Wealth Solutions, so when you come in, you can spend the time and talk to him, and you can bring in your financial planning specialist as well to be involved in those conversations. So all we're doing is we're extending our offering and making sure that absolutely every part of your investment can be looked after with the help of us at Chartered. But that's not why I asked you here today. It wasn't to maybe explain what you were doing, but I just thought maybe as a bit of a background for people that might not know exactly how you fit into Chartered. Why I asked you on the show today is it's January, it's 2023, and I think for many of us the idea in our heads is this year's going to be better, this year's going to hold more hope for all of us, and the bottom line is we all want to know how our investments are going to do. Now, at all, we must put the disclaimer out here, we have, and I don't expect you to have any magic balls that you can know what the future holds, but maybe just what is the sentiment and what are we going into 2023 with?
Well, certainly as we got back from the beach or the bush or wherever we may have been, the markets have taken Happy New Year and the wish of it to heart, and it's been a much better start than I think many would have forecast or anticipated.
But Glenn, at the same time, I mean, maybe I'm looking in the wrong places, and yes, we know that sensational news is the news that sells, but the word that I'm seeing pop up everywhere is the word of recession for 2023.
Sure, and it's I think there's a 2022, when we look in our rearview mirror, was a hell of a year, and there were lots of, as we sat here exactly 1 year ago, and tried to look into the crystal ball, there were a lot of unknowns. The Russian invasion of Ukraine, and
we were coming out of COVID.
But perhaps the most important thing is inflation and interest rates. Okay. And I think that is the that is where a couple of bets are being placed on the table, as it were. Is that we've seen peak inflation, and therefore interest rate hikes are probably near their peak as well. And then the world can settle down into an environment where interest rates certainly are higher, but at least forecastable.
So, I mean, in that way, we are not anticipating any major black swan events, but then again, how are we going to know that? So,
exactly.
So when you talk, you're talking more from an international perspective when you speak like that. I mean, obviously, back home here in South Africa, we've got the political instability and my least favorite topic, the load shedding. I've actually banned a lot of people around me that they're not allowed to bring up the load shedding every time we have a conversation. But I mean, obviously, that's going to affect the markets or not?
Sure. It certainly affects us, as you say, when we drive to and from work at the very least. And when you're sitting at your computer and it blacks out to be put back online by a generator.
And our sentiment.
Yeah, that's exactly right. But perhaps because we're amongst it, we feel it more acutely than anyone else. That's a very obvious statement. But when we look at our market relative to other markets in the world, and in particular emerging markets, we probably, funnily enough, right at the moment, are higher up the pile than we were a year ago, and that's because others have been dragged down, and there are factors at play that are not particularly positive in a few of the emerging markets now. Turkey's one, Brazil is one. You talk about political instability. Certainly those two countries, have it. They have inflation. So good old South Africa, as we sit here, is perhaps not in a relatively as bad a place as we might think sitting here.
So Glenn, if you were talking to yourself potentially, and do you see that there's opportunity right now for people coming into the market? Maybe give me a little bit of, I don't want to call it advice,
Sure.
Just give me a little bit of your insights on what you would tell yourself if you were coming into the market, and then just the same, somebody who's already in the market, is it just sit tight, or is it there's some couple of good changes that you should be making to your portfolios?
So I think that the message I would put across is don't be fearful, because, as I said, when you are sitting, in the middle of what you perceive to be the hurricane on your small stretch of beach or land or whatever it is, there is much more going on around you, and perhaps you're not as bad off as you might think. And the JSE is at all-time highs. Just as I came down from my desk, it was at an all-time high last night, and it's up a little bit and is at another all-time high. Now you can go into many, there are reasons for that, and one is the construction of the market, but some of the sectors that the shares are in are actually being construed in a positive light by investors locally and abroad.
So Glen, thank you very much for joining me and chatting through this. Just for any of you that potentially want to have a conversation with Glen, it's a great idea for you to speak to your financial planning specialist. And then what we can do is we can organize a meeting where Glen comes into your meeting, and then you can help people look at their personal portfolios and potentially give some of your insights that you would suggest. Is that how it works?
Absolutely, yeah. That is always very happy to do that. And in terms of managing clients' portfolios, we certainly tailor based on the requirements of the client, and we are very much an integrated part of the overall chartered system, and work very closely with the planners and the planning teams.
Then thank you so much for joining me.
Pleasure's been mine.
And then just for the listeners, look out for your invites if you haven't already received them to the Jeremy Gardner Economic Update. That's going to be in February and in March. And I look forward to having more conversations with you, Glen, as the year goes on. And who knows where we'll be in 3 months, but let's hope this positive sentiment continues.
Let's hope so. Thank you. Thanks, Ken.
Thank you so much for joining us today. Please feel free to like, share, and comment on the show today. And I'm looking forward to bringing you many interesting topics, and would love it if you shared with me some of the topics you'd like to hear about. Thank you.